Hey, Chris.
Hello, everyone.
Welcome, welcome. Perhaps we can start with some introductions. Would you like to introduce yourself, Chris?
Sure. Whether you're a startup founder, whether you're an investor as well. I was at Google for over 8 years, and when I left, I did my own startup, and the thing that really worked was forming this ex-Google community. So we have now 14,000 members, all of them who have worked at Google, and they come to many of our events. We all have over 300 events a year hosted to support mainly founders. And what we do is we do demo days, we do talent matching, and essentially we help startups to get to be more successful. We ended up doing a demo day at Google's headquarters, and we ended up setting up an investment syndicate, and now we have a fund, and we've invested in over 100 companies over the past few years.
Awesome. Thank you, Chris. And super, super excited to have you, and also your experience with all these Zooglers and your portfolio companies and your investment team as well. So, speaking of portfolio companies, could you tell us who are some of your portfolio companies and what problems do they solve?
Sure. So I'll talk about some of the companies that are Y Combinator related, since it's sort of the theme here. Some of them from crypto, like OpenSea, to developer tools like BuildBuddy, healthcare, digital health, like Blueberry, that helps with pediatrics. Flat is a Mexican prop tech startup. Warmly, the SaaS. Robotics. If any of you are in San Francisco, if you go to Spark Social in the Mission Bay, you see Mesli. They essentially were a YC startup, also a Zoogla company that actually uses robotics to make you delicious Mediterranean food.
Awesome. It sounds like there's a pretty big variety in there. Is there sort of like a theme or what's your mission statement for your portfolio?
Sure. So we support founders who want to work on interesting challenges, and we feel that they're going to be potential billion-dollar companies or more. And essentially, in many cases, a lot of our portfolio have attended our events, whether we do small events with investors where some of our biggest, most successful startups would attend some investor events where there's one investor and 10 startup founders. And through that, they get mentorship from that investor. From there, we end up supporting them. And when they're ready to raise funding, they come back to us for support and introductions to other investors. So happy to also invest in and co-invest some of you. And I see Yuri there. He's a Zoogler as well. Hey, Yuri. We recently saw each other over in East Bay.
It's an unusual time. How has it changed how your portfolios operate?
Sure. So I would say I'm a community builder first and investor second. And during the pandemic, I've actually been able to open up more events. So even if your own platform today, it's probably partly born out of the need for networking and meeting each other online. And so once the pandemic started to hit, more VCs were actually available to speak. So we had top investors from he's still the YC's president, Jeff Ralston, was speaking to us online, as well as folks from Union Square Ventures, 500 Startups. These people usually only speak in person. They would usually be flying around everywhere, having different types of meetings. But at the end of the day, like all of us here, we had to spend so much time in front of a computer. And as a result, more people were available to speak to the community. So we actually had a lot of events, and also the information that was shared to our global community was actually more transparent, and there's more information shared. I'm sure all of you have been into small fireside chats or off-the-record sessions that are usually not happening online, right? Happening in person. But because of the world we lived in, more information was able to be distributed. And so I was able to meet more startup founders everywhere around the world and be able to share more information with them. And in terms of my investing strategy, invest in more global companies. But I would feel that I'm a community builder first, and we were able to help more members everywhere versus only the ones that were based in San Francisco get more information.
I think that's really important. The equity part in being able to provide opportunities to companies all over. Speaking of, could you tell us maybe some of your YC portfolio companies, some success stories or some pitfall stories that our audience could learn from?
Sure. So I grew up in Australia, and I had to give a talk in Sydney about 3 different startup founders and learnings I got from them. And the idea I wanted to share was talking about tenacity and not giving up. And again, it's easy to say that, but if you do have conviction and you think it's a good idea and you want to spend a lot of time on it, one idea and one startup I wanted to share with people was OpenSea's founding story. So they're a YC company. And if you track the number of users that they had, it started very, very, very low, right? They had 2,000 users in January 2019, then 13,000 in January 2020, 36,000 in 2021, and in January 2022, it got over 1 million. And I think a lot of us probably would know the OpenSea's NFT's big story from last year. But again, the biggest learning I had is don't give up if you really think it's a potential strong idea and big idea. But a lot of people gave up during those 3-4 years. And because they were the last NFT company standing in many ways, where Devin and Alex really believed in what they were building, they were able to reap the rewards, right? So.
Yeah, it's interesting you say that. Sort of along the same lines, when the economic downturn hit this summer, YC sent out, basically recommendations that folks should watch expenses and make sure that we're all default alive and basically to survive the economy, right? Like surviving is half or more of the battle. I'm curious. There's a lot of S22 summer 2022 founders here in attendance. Do you have any specific tips for them? Just coming out of YC. Just raised their seed round post YC with Demo Day. Any tips for things they should or shouldn't do? And come back a little closer, maybe. Into the stage, Chris.
Yeah, sure. So I think that in terms of the advice, it's pretty interesting. I've hosted a small gathering of people I had reached out to yesterday, showing some interest in investing, and I ended up having them gather at this event in Palo Alto. So I put the link in the chat, so you can check it out. There's about 1, 2, 3, 4 startups that attended from YC22, and some of them, I think all of them, had already got some of the portion filled. I think that's probably similar to all of you. But I would think that there's a few things. One is it's the same thing what YC would tell you, right? Try to close as fast as possible. Also think of angels as people that have had their 401k as well as other investments in the stock market hit really badly. So try to go for the micro funds and angels, I would say, if you were to target one over the other, because the micro funds have raised their funds already and they need to deploy. But the angels, they may not be as sophisticated enough to continue to allocate funds to invest in these tougher times in the stock market. So try to target micro funds versus the folks that are more angels, is my personal standpoint. I also run different demo days and syndicate startups and share startups with my syndicates. And that's what I've noticed, where there's still micro funds still need to actively invest, but angels going to be a bit tougher.
Interesting. And how does that compare to like larger VCs, on this scale?
Yep. So larger VCs will continue to need to invest. I think part of it is they are going to be continue to invest, but at a slower pace, is what I've been hearing. And what's part of it is, yes, they do have a lot of funds, but they need to secure their funds to continue to help their existing portfolio to make it through these times. I don't think people will really know when the market will get to better times, and as a result, they do need to help their existing portfolio make sure they can continue to those times. I'm seeing a lot of tensions, some down rounds for sure, but in some up rounds, but maybe it's not as high as before. So existing large funds are going to make sure their startups are going to survive. But again, the large funds are also continuing to invest, perhaps at a slower pace. But I think also advice I would give: go look at micro funds versus angels, and the large funds are always going to take longer anyway. So.
Right. A longer due diligence process. Right. It's interesting, and putting a topic up for debate and conversation. I was also interviewing some angels and folks like that. I do see the perspective of, stock market's down and their investment might be down. Do you also see an opportunity where maybe, some angels maybe, less affected by the stock market, but also they have income, right? Steady income. Usually angels work in, directors or VP somewhere, some tech company. And maybe even the other perspective I've heard is now that the stock market is down, they are actually juggling investing in the stock market versus, right?
Exactly.
And they're considering that as well, but they still have the, stable income of their job. So what are your thoughts on that?
You are correct, where people who now have cash and are perhaps more senior in different tech companies, they have more opportunities to invest in the stock market, whereas there's full liquidity, they can easily go in and out, right? Versus an early stage startup where they have to probably hold for 7 to 10 years. But it's the sophisticated investors that you need to try to find who will know to invest in these times. But even perhaps, so I'll give you an example. A friend of mine is an executive, or was an executive at DoorDash, and he sold at the peak as he was leaving to join another company. So perhaps even look at who has left some of these high-flying companies that went public over the past year, and they may be more catch up, because if they're following my friend's strategy, they probably exited their position in the company they were leaving anyway. So that's another tip of perhaps who to go after.
Interesting. Yeah, it's interesting. Once you get down to it, there's a lot of nuances. You can't just group everybody in one category.
If you are selling to different companies and you have the opportunity to meet more than one stakeholder, try to develop relationships with as many of those stakeholders at the moment, because even Google is not prone to letting people go. You've probably read Sundar Pichai saying that Google needs to be more efficient. And what my friends are saying is that even Google may be having some layoffs in the future. So whether it's a big company or smaller company, try to speak to as many stakeholders as possible. So if your stakeholder leaves, you know other stakeholders. Two is perhaps have a lower price point and have a trial period versus locking them in for a year, 2 years to try to get some cash in the door. But those are probably going to be people that can also help advocate for your product in the future. So perhaps think of new, interesting ways to still sell your product. Don't give it away for free, but perhaps structure it differently where you're still getting them as a paid customer, but they can actually be advocate for you in the future.
Oh yeah, I 100% agree with all of that. Those are things that we've had to learn as well. It's contacting multiple people, right? Treating people like people, right? If you have two people on the team talking to each other and now they're talking about your product, right? That's huge. And also, just overall, 100%. Yeah, the trial period, getting people in, right? You need the exposure, and those are your champions. Absolutely. Last question. So, are you currently investing, and what's the best way to reach you?
Yep. So if people clicked on that link, you can see we hosted an event yesterday, and during the event, we decided to invest in 2 companies from the current YC batch. So we're actively investing. We're focused more on Web3 startups right now, and also companies have been started by ex-Googlers, because the limited partners of the Zoogla Fund are mainly ex-Googlers, and we want to support ex-Google founders. But again, you click on my email here, send me an email, and then we can sort of go from there, and I share with my investment team. But I know this is a tough time for fundraising, but again, this is the best time to be building when there's less focus right now, and you can easily also perhaps find co-founders, find new team members. But I'd say if you really do believe in what you're building and you have the conviction, those are the startups that are going to do much better in the future anyway. So keep building.
Awesome. Thank you very much, Chris. Can we get some 1 keys for Chris, please? Thank you.
Thank you so much for having me.
All right. Thank you.
Everyone.